I predict that real estate is going to beat the rate of inflation. So if you invest in real estate today, in 10 or 20 years, you would have had more money if you kept it into an inflation indexed fund or something like that.
Hello and welcome to At the Forefront Fintech Conversations. I'm Sam Belden, VP and Head of Content at Forefront, and with me today is Kirill Bensonoff. Kirill is the co-founder and CEO of New Silver, a fintech lender for real estate investing. Kirill, welcome to At the Forefront.
Thank you, Sam. Thanks for having me.
Absolutely. Glad to have you on. Kirill and his colleagues are doing some interesting things in the world of real estate investing. And I know that he has some particular ideas on the transition from active to passive investing and as well as on AI. So today we're going to get into all of that, some other exciting technological innovations that are happening in the world of real estate. But I guess starting high level, Kirill, we talk a lot about the capital markets and digital assets on this podcast, less about real estate investing, although it has come up. And so I wonder if you can give us an overview of the state of the real estate market today and how how you think investors are thinking about real estate vis-a-vis other assets that might be in their portfolio.
Sure. So I think real estate is a super interesting asset class, right? I mean, first of all, real estate is in itself multiple asset classes, right? There's commercial real estate, multifamily, mixed use, and residential. Really what we deal with is residential, mainly single family or small multifamilies, like 1 through 4 unit multifamilies. So really, like, the state is probably very different. As many folks probably know, the commercial real estate market is really suffering because of the COVID, post-pandemic issues, the changes in office space usage and things like that, high interest rates. Other things are other subclasses, I guess, of real estate are doing much better. For example, data centers are doing great. Other logistics types of buildings are doing very well. And then residential, I think, is in a class of its own, and it's doing very, very well. And I think really what's driving it, in my opinion, right, what's driving that is the lack of supply. There's something like 2 million unit shortfall the last I've seen. I think there's probably even more. Right, as kind of population expands, whether it's through births, people growing up, people coming into this country, foreign buyers buying in the U.S., all of these things contribute to a demand, right? And at this point, the economists have estimated, again, the numbers I've seen were somewhere around 2 million unit shortfall. So the residential real estate space is doing quite well now. Again, within this, there's geographies, there's all kinds of other things. So, with that, and this is like very, very recent, and I'm not even clear as to where it's going, but some areas, because we have these high rates, transaction volumes have really been slow. And so people have been waiting, like, when is the bottom going to fall out, right? And it's been like years in the waiting. When is it all going to crash? And when is it all going to crash? Well, in some areas, I think because there now are potentially more sellers than buyers, some price corrections are happening. Again, this is like very real time, things that I'm not even sure where they're going again, but it may be happening in some small subsectors. I think specifically some areas, west coast of Florida, for example. I think we've seen some of that happen in Austin, Texas. Some areas of California have already kind of gone through that and now are kind of back on the other side of it. So I think generally the market's doing great. Some submarkets are not doing as well. However, those submarkets aren't doing as well because they've heated up so much through the past, 4 or 5 years that now there's some, price depreciation pressures is being let out a little bit, right?
Yep.
So that's kind of the long answer to your question.
No, appreciate it. I mean, that makes a lot of sense. You brought up the pandemic. I mean, it's almost like an assumption at this point, but in real estate specifically, the pandemic had such an impact on how we work, but also where we live, the kinds of things we value as far as our living situation goes, the flexibility that we have as far as commuting. So the fact that there are still corrections occurring even 4 years after the fact makes all the sense in the world. So appreciate that overview. Let's talk a little bit about the work that you do and the topics that you focus on. So I know that you and the team at New Silver are very focused on technological innovation for real estate investing, and I know that you guys have found a way to bring the concept of transitioning from active investing to passive investing to real estate. I'm certainly familiar with that topic. I often think about it in the context of the public markets. Tell us more about what that looks like in the real estate space.
Right. So I mean, what we've done there is essentially built a private credit fund. We're certainly not the only ones doing it. I think there's a lot of talk about private credit, and there's obviously various forms of how people think about it. But we ourselves are essentially a tech-enabled originator for construction loans, residential transition loans, that kind of stuff. So, we're, I think, fairly good at marketing, underwriting, and originating these types of loans. And then we have various ways that we transact after the loan is originated. Some of the loans we hold on our own balance sheet. We have some, a fair amount of loans there, and we have some partnerships. Some of the loans are, we put on our partner's balance sheet. So there's various things that happen here, but we have what we call essentially the New Silver Income Fund that's been around for, I believe, a couple of years now, and hasn't really been too active until early this year. We really started fundraising for it, and it's been doing well, since it started. But especially this year, I think we've seen a lot of momentum. And really, what the fund does is we have a senior investor that provides senior leverage. Then we have ourselves, New Silver, our own capital, and then we have the fund, which is LPs, outside investors. All that money comes together, and that really forms our balance sheet. So a lot of the loans that we originate go onto this balance sheet, and they're typically a 12-month loan. There are extensions sometimes possible, so it could be up to 18 months, but still a fairly short duration. So it could stay there, let's say, for up to 18 months, and folks can put their money in and essentially earn a current income on it. So that's kind of how we think about it, and that's why it's called the New Silver Income Fund. It is for accredited investors, and it is obviously there is some risk to the investment. It's a private fund. It's not a tradable security like the stock market would be. But then on the positive side, the returns have been fairly good. So I think we haven't published actually this past quarter, but we did the numbers, so we're going to publish it soon. It was something like a slightly higher than a 5% quarterly net return. So annualized, it's running like at a 20%. I think last quarter was slightly lower, so maybe it's around 19% annualized right now. But still a very good, very solid return that we think compensates folks for the risk they're taking and placing their funds into a private, non-tradable fund, which has a lockup and things like that.
Awesome. No, that's great to hear. Appreciate that overview. Sounds like you guys are doing well with it. And I know that, when it comes to finding that edge, when it comes to real estate investing, technology is like in many markets more important than ever. So maybe let's talk about some of the technological innovation that's affecting real estate markets today. When you think of blockchain, for example, and any examples about how blockchain technology is influencing the real estate space?
Yeah, so that's a great question, and I think I do know a fair amount about it. I think in theory, blockchain is going to do a lot of good things and make a lot of positive changes for real estate. And I could give some examples. In practice, we haven't seen too much implemented yet. But in theory, if you think about blockchain, I mean, really, blockchain is, for folks that aren't as familiar, perhaps, but it's a distributed database that should be immutable, meaning that not there shouldn't be like one person that goes in and makes changes to any of the numbers, right? There is obviously ways to make changes, but that will require, hopefully this network is quite large, and maybe there's millions of users, and to make changes is going to require some large percentage of these users, maybe 50% or more, maybe less in some cases, depending on the design of that network. But really, that's what it is, right? And so the values of blockchain are many, right? It's the ability to transact faster, to settle faster, to tokenize and break up large assets into smaller pieces and sell those, and form capital in new ways. I mean, there's just so many different things. And one of my favorite examples, which I kind of talk about a lot, is the ability to essentially sell a property. If we're thinking about real estate, right? But this could apply to any type of a value transaction, right? But think about real estate. Like right now, if you're buying a home for yourself, right? You like think about all the steps, all the things you've got to do, like, and how many intermediaries are involved. You've got an attorney, you've got a title company, settlement agent, you've got title insurance, which is very expensive. We've got the lender, potentially mortgage lender, you've got the buyer and the seller, obviously. So it's like, you've got like 5 different parties or more in some cases that have to come together a lot of times physically into the office at the same time, sign papers, move things around on the table. And, a lot of times like digital isn't even possible still. Sometimes it is. So yeah, it's still kind of an old fashioned process. With blockchain, you could essentially have all of these things, semi-automated or maybe fully automated, right? So instead of the attorney's office or the title office and the title insurance, which to me is like the biggest thing. It's like, wow, you have to really have like a whole other industry, an insurance industry, which is very expensive as a seller, as a buyer, you're basically like all these costs are baked in, right? You've got to buy, like if you're buying, you got to buy your buyer's policy. You might have to buy a lender's policy. So depending on the value of that property, you're spending thousands of dollars potentially, right? Just usually for nothing, right? It's usually not doing anything, but you need it because you don't know, right, whether or not the title is clean, right? Like no one's going to come to you a week or a year from now and say, hey, this was actually my grandma's property. She gave it to me, and I have this piece of paper to prove that I'm the owner. Well, that's when title insurance should step in. So it is useful. But if we had this blockchain enabled system, the way I'm imagining it is, right, you have the buyer, you have the seller, and maybe the property is represented by a token. I am the owner now, I'm the seller, I have the token in my wallet. You're the buyer, right? Maybe you send your money, your digital currency, into a smart contract, which is run by a law firm or a title agent or someone like that, but it's automated, right? So instead of going to the office, you send your money in. Then I send my token that represents my deed, right, into the same contract. Maybe some things get checked. Maybe there's an oracle that checks for, I don't know, that you're a real person. Maybe it does your KYC checks, whatever, right? Like those are the details that would have to be worked out. And then once all that is cleared, I get money, you get the deed, and now we're done, right? So now instead of having these 5 parties, involved, you might have, one party involved, right? Somebody, or maybe none at some point. Maybe it's all automated. So that's like, to me, one of my favorite examples, but it's really quite a ways away, right? Because, right, like now, how does that get recorded? How is the county involved? I mean, there's so many things. And I think that the reason why I like real estate and hate real estate at the same time is because there's so many data points, but at the same time, it's all siloed and it's still not modernized to like, where many other things are. So we've got a long way to go.
Yeah, no, absolutely. Appreciate that overview. And I'm not invested in real estate myself, but having friends who have, I know from anecdotally, the hoops that you have to jump through. Sometimes you go to one facility to get one signature, you drive a couple towns over to get another signature, and this value of the blockchain to kind of preserve that security and immutability while cutting out the middlemen and just adding efficiency to the whole process. That's a powerful value prop. So appreciate you running through that.
Absolutely.
Let's shift gears a little bit. AI obviously has become a major topic in every facet of life and in business, but in investing, there are some particularly fascinating use cases. So, have you seen any interesting applications when it comes to real estate investing? And curious what you think the long-term impact might be.
Um, as far as AI and investing in real estate. So I think it's very very early days. I believe. I mean, I have kind of seen anecdotally some fintechs, I guess that say that they're using AI to sort of make investments into the best places. I'm not so sure that the technologies or the technology could be there. I'm not certain. Like I haven't used anything myself, so I can't give you firsthand experience. But for example, one application is just kind of using sort of the larger LLMs, whether it's Chat GPT or something else, to help you value real estate or to look for comps or to look for certain information. I think that's the kind of stuff at least we use it for now. What like one other thing is like having AI read your appraisal, right? Like we deal with a lot of appraisals, and there's usually, I don't know, number of pages when they come in. And so we oftentimes ask Chat GPT to review our appraisal, and it gives us like a nice summary. We could ask for like for its opinion, like find comps, find recent sales, like a lot of these things, so it could kind of like supplement the appraisal.
Mhm.
So I think that like that type of stuff, I think is happening right now. And listen, I'm sure there's going to be a ton more happening. I'm sure that there's funds, maybe large funds now that have built their own models. They're kind of using AI to give them some direction in investing. But from what I've seen, really, like we're involved in like loan trading processes pretty heavily and other things. And I think it's still largely a human driven world, but AI is it's going to make a huge impact. I mean, I think in the next 2-3 years we're going to see a lot of changes.
Awesome. That's a great overview. Yeah, no, like you said, very, very early days, but I do feel like it's just useful, in real estate and in investing in general, but across the board, it's useful as an additional perspective. Even if you're not looking to AI to make the decision, give it some inputs and say, what do you think of this? Like, can you quality check this for me? Or, if I'm preparing a list of 15 questions to ask a client on an interview, I might say, give me 10 more that I could ask. And if it gives me two that are useful to add to my line of questioning, that's good value right there. So very interested to see where it goes for real estate. But yeah, to your point, early days. Speaking of the future, I'd like to invite you to make one prediction for the future of real estate investing. You can go as bold or as subdued as you want to, but curious about where you see this space going and what we should all maybe be keeping an eye on.
Well, I think just one general thing I want to say is I predict that real estate is going to beat the rate of inflation. So if you invest in real estate today, in 10 or 20 years, you would have had more money if you kept it into like an inflation indexed fund or something like that. So you're going to outperform, you're going to outperform sort of the baseline inflation of the money, right? So you're going to essentially make money, right? And I think if you do it smartly, you could end up with a significant amount of money, right? Like there's a ton of opportunities in real estate. There always is.
Awesome. No, that's great. And with inflation as high as it is, people will definitely be looking for ways to beat it. So good to know that you're bullish for what the future holds here. Awesome. Kirill, I want to thank you for your time and insights today. Great conversation about the state of the real estate market, some of the technological innovations that might impact its future, and then some of the work that you and the team are doing at New Silver. So if you'd like to learn more about what Kirill and his team are doing, you can head over to newsilver.com. And if you'd like to listen to more episodes of At the Forefront like this one, head over to forefrontcoms.com. That's comms with two M's. You could head over to the news and insights section and explore a full archive of At the Forefront episodes. So Kirill, thank you again for tuning in. Thanks to our listeners for being here. And until next time, this has been At the Forefront. So long.
Thank you.